you've been following the markets lately, you've probably heard the name Tom Lee. He's the Wall Street strategist who always seems to show up right before big market moves. Calm, data-driven, and almost unshakably bullish when everyone else is panicking. And now his latest forecast has crypto investors talking again. Because if Tom Lee is right about what's coming next for digital assets, it could change everything for coins that actually do something, especially XRP. Lee's message is simple. The world is on the edge of a new liquidity wave. Interest rate cuts, ETF inflows, and institutional adoption are aligning for what he calls a multi-year expansion cycle. He's not talking about hype or memes. He's talking about the mechanics that drive money itself. And when that kind of capital rotation begins, assets built for real utility, fast settlement, cross-border liquidity, institutional rails, stand to gain the most. That's why this forecast, even though it doesn't name XRP directly, might be the most important signal XRP holders have had in years. Because if the macro setup unfolds the way Tom Lee expects, the environment that once punished XRP could become the perfect storm that finally unlocks its value. Let's break it down. When Tom Lee looks at markets, he always starts with liquidity. Every major bull run, in stocks or crypto, begins when liquidity expands. Right now, the signs are flashing green. Inflation cooling, interest rates peaking, central banks preparing to ease. As borrowing costs fall, capital starts flowing again, from cash to risk assets, from bonds to equities, from equities to crypto. Lee's research firm, Fundstrat, tracks this using global M2 money supply and real yield differentials. Their models show that 2025 into 2026 could mirror the explosive liquidity environment of 2020-2021, only this time with institutional infrastructure already in place. That matters for XRP. During the last bull cycle, XRP was fighting a lawsuit and locked out of major exchanges. Now it's legally cleared for US trading and integrated into new corridors worldwide. So if the same flood of liquidity returns, XRP is positioned to actually receive it this time instead of sitting on the sidelines. Tom Lee's second pillar is institutional adoption. He argues that the approval of Bitcoin ETFs marks the beginning, not the end, of institutional involvement. Once compliance teams build frameworks for one crypto product, others follow. That's how Wall Street works. Replication. Lee estimates that within 2 years, digital asset allocations could grow from less than 1% of managed assets to 3 or 4%. That may sound small, but across global funds, that's trillions of dollars. Here's where XRP enters the equation. Institutions are discovering that Bitcoin is great for exposure, but terrible for payments. They need assets that can move value fast and cheap across borders. That's the exact problem XRP solves. So while the first wave of institutional capital enters through Bitcoin ETFs, the second wave will hunt for utility, tokens that integrate with real financial rails. That's where Ripple's ecosystem becomes impossible to ignore. To understand why, look at what's been quietly happening behind the scenes. Ripple has gone from a controversial startup to a regulated fintech partner working with more than 300 financial institutions. Its on-demand liquidity product now settles payments in seconds across dozens of currency corridors. It removes the need for nostro vostro accounts, freeing billions in trapped capital. And it runs on the XRP ledger, fast, transparent, and ISO 2022 compliant. The same messaging standard global banks are migrating to right now. When Tom Lee talks about the coming liquidity cycle, he's describing the same macro environment Ripple has been building for. Low rates that encourage cross-border lending and trade. Tokenization of real-world assets, demanding instant settlement. Financial institutions finally comfortable using blockchain infrastructure. Put simply, the world Lee expects is the world XRP was designed to serve. Now, let's connect the dots between Lee's macro optimism and XRP's micro fundamentals. If the Federal Reserve begins cutting rates through late 2025, global liquidity expands. Expanding liquidity drives demand for alternative assets. Demand for alternatives lifts crypto, and within crypto, the biggest re-rating happens in assets with genuine use cases. Bitcoin benefits first, as always, it's the headline. Ethereum benefits next, through DeFi and staking. Then liquidity rotates to what traders call utility plays. That's when XRP shines. History supports this pattern. In 2017, altcoins exploded 6 to 8 months after Bitcoin's breakout. In 2021, they followed again after institutional inflows hit Bitcoin ETFs. Lee expects the next wave to be bigger because the investor base is bigger, and this time regulations are clearer. For XRP, regulatory clarity isn't just a headline, it's a gateway. Banks, payment providers, and corporates that once avoided it can now integrate it. That's why 2025-2026 could mark the first cycle where XRP participates fully in the global bull market instead of lagging behind it. Let's talk numbers, Tom Lee style. Lee's macro model for Bitcoin projects a new all-time high driven by earnings yield parity and ETF flows. He sees crypto's total market cap potentially tripling within one cycle if liquidity expands at the pace he expects. Apply that ratio to XRP, and you see why enthusiasm is building. At a conservative 1% share of total crypto value, XRP's market cap could reach $350 billion, implying a price in the $6 to $7 range. At 2%, it's over $10. At 5%, where some analysts place it, if institutional settlement ramps, that's more than $25 per coin. Those are not moon numbers, they're liquidity cycle math, and they illustrate why macro matters as much as technology. Another piece of Lee's forecast is ETF contagion. When one asset class gets an ETF, others follow. We've already seen spot Ethereum ETF approvals. Tokenization ETFs and blockchain infrastructure funds are next. Every time a new product launches, traditional finance gets more comfortable handling digital assets. That's the long-term bridge to RippleNet adoption in the US banking system. As ETF demand normalizes crypto exposure, compliance barriers fall. Then payment and liquidity solutions, like those powered by XRP, become natural extensions. Tom Lee says the key driver for the next bull market will be trust, institutions re-entering the space, because the plumbing now works. Ripple spent a decade building that plumbing. So what happens if Lee is right and liquidity floods back into crypto? Retail attention returns, FOMO ignites, and capital hunts for narratives. But this time, the dominant narrative isn't meme or metaverse. It's tokenized finance, real-world assets moving on-chain. The World Bank, the IMF, and the BIS have all endorsed tokenization pilots. BlackRock launched its first on-chain fund. HSBC and Citi are running tokenized bond platforms. All of that requires interoperability, and interoperability is XRP's superpower. Ripple's technology doesn't compete with banks, it connects them. That's the distinction regulators care about, and the reason XRP can survive where other tokens struggle. Tom Lee's third major theme is sentiment inversion, the idea that markets turn when pessimism peaks. Look around right now. Investors are exhausted from regulation headlines, ETF delays, and economic uncertainty. Crypto sentiment is neutral at best. That's exactly when major reversals start. Lee's data shows that when investor surveys hit 70% bearish, forward 12-month returns average plus 190%. If that pattern holds again, the next surge could already be forming beneath the surface. And XRP, having endured more negativity than almost any asset in crypto, is perfectly positioned for a sentiment flip. There's another subtle link between Tom Lee's macro framework and XRP's fundamentals: velocity. Lee often says the key to valuing crypto is understanding transaction velocity, the speed at which a network moves value. High velocity means real usage. Low velocity means speculation. The XRP ledger consistently records thousands of transactions per second, with costs measured in fractions of a cent. Its speed and scale put it in the top tier of real-world blockchain throughput. If you apply Lee's logic, rewarding networks that actually process value, XRP's long-term valuation potential is obvious. Now let's zoom out and look at the bigger picture through 2026. Interest rates fall, liquidity rises, tokenization becomes mainstream, banks modernize to ISO 2022. Ripple integrates deeper into international corridors. At the same time, institutional investors, guided by analysts like Tom Lee, allocate more capital to digital assets. That combination is what creates wealth cycles. Not hype, not overnight miracles, but alignment between macro forces, technology, and timing. And for XRP, 2025-2026 is that alignment window. So what could go wrong? Lee always cautions that timing risk is real. Markets can stay flat longer than traders can stay patient. Regulatory clarity could still take time, and liquidity can tighten again if inflation surprises. That's why his outlook is bullish but disciplined. For XRP investors, that means patience and perspective. The fundamentals are strong, but the market moves in waves. You don't need to guess the exact day the tide turns. You just need to be positioned when it does. Here's the mindset Lee promotes, and it fits perfectly with Ripple's journey. Investing isn't about certainty, it's about probabilities. When probabilities tilt in your favor, when policy, liquidity, and technology line up, you act. That's what institutional money does, and that's what retail investors can learn from. Right now, those probabilities are aligning for crypto, and among the assets positioned to benefit, XRP sits near the top of the list. Let's imagine how this plays out over the next 12 to 18 months. The Fed starts cutting rates, bond yields fall, risk appetite returns, ETFs pull billions into Bitcoin and Ethereum. Then capital rotates to high utility tokens. Meanwhile, Ripple signs more banking and CBDC partnerships. Tokenization volumes climb. News breaks that major payment corridors are settling through RippleNet. Suddenly, XRP isn't a speculation, it's infrastructure. That's the inflection point Tom Lee's macro map predicts, when macro liquidity meets real-world utility. Now picture the psychology. For years, XRP holders endured ridicule, delisting, and uncertainty. Then, as adoption becomes visible, the narrative flips. Analysts who once ignored it start covering it. Funds begin adding it quietly. Retail attention floods back in. That's how exponential moves start. Not from hype, but from recognition. Lee calls this the reflexive loop. Price validates belief. Belief drives demand. Demand drives price. Once it begins, it feeds on itself until valuations overshoot. If that happens again in 2026, XRP could experience its strongest re-rating ever. But here's the key takeaway, something Tom Lee and Crypto Equation viewers can agree on. Markets reward conviction grounded in data. Blind optimism burns accounts. Informed optimism builds wealth. The data say liquidity is expanding. The data say institutional frameworks are forming. And the data say XRP's network is more active, more regulated, and more connected than ever. Those aren't opinions, those are facts. And when facts align with forecasts, opportunity follows. So when you hear Tom Lee's forecast just changed everything, don't think of it as a wild prediction. Think of it as a signal that the macro winds are shifting in XRP's favor. For the first time in years, the environment that once held it back may now accelerate it. Will XRP hit $10, $20 or more by the end of the next cycle? No one knows for sure. But what we do know is that the same forces that pushed Bitcoin from thousands to tens of thousands are lining up again. This time with a broader set of assets ready to ride the wave. And XRP, with its unique role in global liquidity, is one of them. If this video gave you clarity, subscribe to Crypto Equation, where we break down crypto, finance, and innovation with data, not drama. Comment below, do you think Tom Lee's macro outlook will spark the next big crypto wave? And if it does, where do you see XRP by 2026? Remember, markets move in cycles, but conviction moves ahead of them. Stay informed, stay patient, and always think in probabilities, not promises. This is Crypto Equation, and I'll see you in the next one.